Hello, and welcome once again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. And we have got a goodie for you today.
Yeah.
We've mentioned this before on FAIRtax Power Radio about how the tax code is written by millionaires for millionaires and up. And you've done some remarkable research on this.
We've got some good stuff here. Yeah.
Before we get into it, though, let's again thank those who have been sending us email through our email address, thefairtaxguys@gmail.com, who have been leaving comments and likes on our Facebook page, The FAIRtax Guys. We invite you, as they used to say, keep them cards and letters coming.
Yeah, yes, please do.
Although it's no longer cards and letters. It's all electronic, but it'll work. Same difference.
Yep, we use only recycled electrons.
No fair tax on recycled electrons. Okay, let's get right into this thing. This is amazing because we've always said, especially now during this election season, and again, we're not being partisan here, but Donald Trump has been saying over and over and over again how the system is rigged.
Yeah.
And he's talking mostly about the electoral system, but there are a lot of other things that are rigged against the common American like you and me that are to the benefit of the wealthy, and you got you a whole handful of them over there. Go.
Yeah, the more I read about what goes on in D.C. behind the scenes, the more disillusioned I become. Here is an article, proof. D.C. thinks Americans are stupid and should do what they are told. All right, we've suspected this. I imagine everybody listening to this suspects that D.C. doesn't really think much of us.
Yeah, run that by them one more time. Let this sink in, folks.
Yeah, the sense of superiority you feel from your leaders in D.C. Well, it's real, and now we have proof. The ruling elite in Washington have no idea what Americans think, and they don't care. They think Americans are stupid and should do what they are told. And this is according to a new survey that was done by Professor Benjamin Ginsberg and senior lecturer Jennifer Bachner. All right. Among the people that they surveyed, federal bureaucrats, think tank leaders, and congressional staff members, 72% believe the public has no knowledge about policies, and 71% believe that the public doesn't understand science and technology.
I bet you that's low. I bet you the actual number is even higher than that, but people don't want to be quite that ugly to pollsters. But that's astounding.
Yeah, and you know what? That really hits me because I was a high school science teacher. I'm actually pretty good in science, but anyways, among the 8 different policy areas surveyed, no more than 6% of these people in D.C. believe the public has a great deal of knowledge on the topic. So, you know what? The feeling is mutual. They don't think much of us, and we don't think much of them. But there is one important distinction. They work for us. They may not realize
they don't seem to understand that, but they do.
Yeah, and and you know how we can drive that point home? When we go to the voting booth and we vote for the people that we believe are truly going to represent us. Don't vote for somebody because they're bringing home the bacon. Vote for somebody that's really going to help America.
Yeah, and don't vote for the D or the R. Vote for the person.
Yeah. So anyways, I just kind of had to get that off my chest because it really grates me.
What's really astounding is that those people up there who think we are so stupid are the ones that are in charge of the government and specifically the tax code that we all have to live under. And all of those guys are millionaires, in some cases multimillionaires or even higher than that. They're writing the tax law. Now, they won't tell you that they're writing the tax law for their own benefit, but you found some remarkable examples of why that's happening.
Well, first off, I did a quick search. How many millionaires are in Congress, in the House of Representatives and Senate?
It's more than 3.
It's 268 is the last figure. 268, that's roughly half of them. Now, I didn't have time to research how many of them became millionaires while they're serving in Congress. I can tell you, my wife found out one particular item. She was doing some research on that. She found out that one very prominent member of the Senate from 2004 to 2010 increased his net worth by 748%. And I don't think that means that he started out with $100 and ended up with $748? No, I don't think so. All right. So that particular person's net worth increased immensely while he was serving in the Senate. How? Why?
Selling tax favors, I bet.
So, yeah, we came up with the phrase, the tax code written by millionaires for millionaires. And that's essentially what it is. Written by millionaires for millionaires. Because do we have in this country of 320 million, are there half of these people are millionaires?
I don't think so.
No, I don't think so either. So I'm not sure how well the D.C. establishment really represents the people when, they
live in an entirely different universe.
Yeah, that's right.
They really do. Inside and outside the Beltway, it's like two entirely different planets almost.
And that's why a lot of parts of the country, these folks in D.C. call that flyover country. That's just where they fly over to go from one coast to the other. All right. So we know from research, from a survey, that the people in D.C. really don't think much of the American people. And even though the feeling is mutual, we need to do something about it because we're the ones that vote. All right.
Now, fortunately, we here at FAIRtax Power Radio have got access to real live experts who know their stuff inside and out. One of whom, of course, is our AFFT president, Steve Hayes. Yeah. And he's come up with some really good stuff that we're going to get into here in just a second.
Yep. I wrote to him and I said, Steve, we're going to do a program based on, the tax code benefits the rich. And do you have any examples of this? Now, there's probably, Steve, first off, if you listen to a presentation by Steve, he usually starts off by saying, I'm a recovering tax attorney.
Yeah, that's the first thing he said to us when we interviewed him.
Yeah. And that's how he started as a tax attorney, and he quickly realized he didn't really like what he was doing.
He used the immoral word to describe the tax code, if I'm not mistaken.
Anyways, so I wrote to him. I said, Steve, you got any examples? He says, this is a tough question. The entire tax code has provisions that assist millionaires. One is the municipal bond exemption. This allows income tax to be free. So if you invest in municipal bonds, there's no...
The return on that is not taxed.
Now, another one that he wrote, and I'm going to read this, but it's going to make more sense later on in the program because we're going to get to this in more detail. Many millionaires benefit from the fact that gains are not taxed until they're realized. So if stocks or a building appreciates, then no tax is due until it's sold. Since borrowed money is not taxed, many people borrow against their assets and live very well with no tax. In addition, they are usually able to deduct the interest they pay on the loan. Now, at death, all of their assets are marked up to the fair market value and no tax is due. Now, that didn't make a lot of sense to me until I did a further research, and I found this article on Fox News Business, or just Fox Business. It was published in December of 2012, so it's about 4 years old, but it's still, these parts of the tax code are really pertinent. And what Steve was talking about was it's called the step up in basis. And that means, let's say that a congressman gets a lead on an apartment building and buys it for $500,000.
Hang on a second. Let's break this down to the simple level that we can understand it. Define the term basis. When you have an investment and you buy it, be it a stock or a bond or a building or a piece of real estate or whatever, basis is the amount of money that you paid to acquire that asset.
That's right.
And you got to keep track of that because then when you sell that asset, the difference between what you paid for it and what you sold it for is the amount that you're supposed to be taxed on.
Yeah, the appreciation. And you're supposed to be taxed on that.
So basis is what you paid to get an asset.
But here's the loophole. Okay, so let's go back to my example. Congressman buys an apartment building or some kind of building for $500,000, and they're in Congress, they're out of Congress, whatever happens. Let's say the congressman pass away, and at some point, and the assets go to his heirs. Okay, and let's say that at that point the building is now worth $1 million, so it has appreciated 100%.
Yeah,
But
you got that extra $500,000 now.
Yep.
That is what you earn by the appreciation of the asset, and normally you would be taxed on that. Except that doesn't happen when you pass it on after you die.
that's right. So when the assets are passed on after the death of the original buyer, the heirs are allowed to step up the basis to its current value, and no tax is levied. None.
Okay, so the congressman buys it for $500,000. The building appreciates to $1 million. Then when the heir, his son or whatever, inherits that building, the son's new basis is the $1 million, not the original $500,000 that he paid for.
Yeah.
So in other words, they get to keep that $500,000 worth of appreciation tax free.
So you got to wonder, how was this inserted into our tax law?
Because that's not something that the average American would ever even think about, much less have to use.
No, I think I'm pretty safe in predicting, Bob, that you and I will never be affected by that part of the tax code.
I don't think so.
No. Jeez. So the step up in basis was created, that part of the tax law was created by millionaires for millionaires. That's one of our examples.
That's astounding. And again, that's another characteristic of the current tax code. There is so much of it and so much to it, 75,000 plus pages with all the supporting case law and all, that nobody, not even the professionals whose job it is to keep up with it all, can really comprehend it all, can really understand it all, can even know what's in it.
Yeah.
So those are provisions. I bet you if you stopped 100 people on the street, all 100 of them would have no clue what that provision exists in the tax code and wouldn't care because it doesn't apply to them.
Yeah, that's right. But it does reduce the tax input, or it does reduce the amount of taxes paid. Okay, if you and I bought a building and then sold it 10 years later and made a profit on it, we would have to pay taxes on the amount it appreciated. It's just that simple. But some people can escape it under certain circumstances. Now, it's true that they have to die to do it, but this,
that's a benefit for the heir, not the original buyer. But
yeah, so
it's still there.
Good for the family. So, anyways, but it's all 100% legal, 100% legal. So, anyways,
that reminds you of the storm that's going on now with Donald Trump and his taxes. What he did was legal.
Yeah.
Don't get mad at him. Get mad at the tax code that lets him do that.
Yeah, that's right. So, okay, mortgage interest deduction.
Now, that's something a lot of average Americans do understand and do happen. So,
absolutely.
Let me hear your angle on that.
Well, mortgage interest deduction on your federal tax return is intended to encourage home ownership by giving you a tax break on the interest you pay on your house note. Okay,
but I found out on a relatively modest mortgage like I had, even when I itemized that deduction, I still came out ahead taking the standard deduction.
Yeah, exactly.
That thing is not a huge benefit to, regular Americans.
Yeah, exactly. You spend all that time working through all the tables and then come to find out after like 8 hours of work, the standard deduction is more beneficial to you. So,
doesn't make you want to just rip it all out by the roots.
Hey, that's a good idea, Bob.
Let's
we got to
do
get
that.
rid of this tax code. Anyways, according to a study by the Wharton School at the University of Pennsylvania, mortgage interest deductions for households with incomes between $40,000 and $75,000 average just $523. However, households with incomes above $250,000 enjoy an average write-off of $5,459, or more than 10 times as much. So the mortgage interest deduction is not a big deal to people of average means,
So
like
the
us.
bigger your mortgage, the higher the benefit.
Yeah.
And guess who has the bigger mortgages?
Yeah. The millionaires that write the tax code for the millionaires. And why do they do this? Because they think we're stupid.
Yeah, they think we're stupid. Yeah. It says so. They answered the pollsters. They said so themselves.
Oh, okay. Capital gains. Here's another one. Capital gains. Why does billionaire Warren Buffett pay less tax than his secretary? First off, I take exception with that statement. He does not pay less taxes. He pays a lower rate. he does not pay less taxes. And every time I hear that on TV, I kind of cringe because he does not pay less taxes than his...
But he does it legally. It's the system, not him, that's at fault.
Long-term capital gains, which derive from the sale of investments, such as stocks and bonds, held for more than a year, are taxed at 15%. 15%, that's it. What is the average worker when they're paying taxes out of their paycheck? All right, you get
almost that much taken out in payroll taxes.
The withholding, income tax withholding. Then on top of that is FICA. All right, the withholding tax, and that usually goes up to like 23%. It could be higher if they're in a higher tax bracket.
And those payroll taxes don't apply to the capital gains folks.
That's right. That's right. And it's 15%. That's well below the 35% maximum tax rate on ordinary income such as wages. And they don't pay any FICA. These wealthy people like Warren Buffett who pay 15% on their investment earnings, they don't pay any FICA, for Social Security and Medicare. So again, it's a part of the tax code that was created by millionaires for millionaires, and the rest of us don't get it because they think we're stupid.
Yeah, but let that sink in, folks. The folks that are making multiplied millions of dollars off investments are not supporting Social Security or Medicare because both of those vital programs are currently supported only by payroll taxes that are levied against people who are working for wages. Yeah. The fair tax changes that. The fair tax means Warren Buffett and Mitt Romney and Donald Trump and all these rich folks are going to be supporting Social Security and Medicare because I bet you a whole lot actually, that their spending exceeds the poverty level.
Yeah. If Mr. Buffett is so concerned about this, why doesn't he promote the fair tax?
Good question. Yeah.
So this one more statement in this section here before we go on to another topic. Americans with an annual income of $1 million or more, or which are 0.3% of all the taxpayers, enjoy 70% of the capital gains benefit.
Now, was that 0.3 of the population gets 70% of the... Did I hear that right?
0.3% of the taxpayers, people that make $1 million or more, they represent 0.3% of all the taxpayers. This was 4 years ago. Enjoy 70% of the capital gains benefit.
That sounds like they wrote the tax system.
Yeah.
Oh, wait. They did write the tax system.
Yeah. And they expect us to be all right with it because they think we're stupid.
Yeah.
All right. Retirement savings, tax shelter for the rich. Tax-deferred retirement plans are designed to help all Americans save for retirement. Now, again, remember, this was written in 2012. In 2011, Americans will save $142 billion in taxes by sheltering their personal income, like 401ks, tax-sheltered annuities, that type of thing, IRAs, pension plans, and so forth, according to the U.S. budget. All right. Since the wealthy have more to save, they tend to reap more of the tax benefit for saving on retirement. According to the Tax Policy Center, the top 20% of income earners enjoy 80% of the tax write-offs for these investment instruments, while the bottom 60% of the wage earners average a whopping 7% of the savings. So the top 20% of the income earners enjoy 80% of the tax write-offs.
So if you got a nice big whomping income, that means you can afford to stick a bunch of it off into these tax-deferred instruments and still live on what's left.
That's right.
So you're getting a benefit that most people don't. And how come they get away with that?
Because they think we're stupid.
That's got to be our new catchphrase here at FAIRtax Power Radio. It really does. What else you got there?
Okay, charitable deduction, good cause policy flaws. That's the title of this section. The charitable giving deduction effectively operates as a federal matching program. Again, I take exception to this. I can't remember who wrote this, but there's a couple of things that he or she said in here that I wouldn't have written it that way. But anyways, all right. Make a charitable deduction and receive a tax break. Okay.
That's really cool if you have your own foundation and you can contribute to yourself. I know somebody that's doing that.
Yeah, I have heard about that. Yeah, that's pretty cool.
Mercy.
The problem with the charitable deduction is similar to the mortgage income tax break. Let me say that again. The problem with the charitable deduction is similar to the mortgage income tax break. The value of the deduction increases with income. If I give $1,000 to a charity and I'm in the 10% tax bracket, I get a $100 break on my taxes. But if I'm in the 35% tax bracket, I get back $350 from the federal government. So if you're a person of means and you can afford, to give more to charity, you can get a bigger tax bracket, a tax break from that. So there are 5 ways. I think I went through all 5 of them, didn't I, Bob?
I don't know. I can't count that.
Yeah, because
I take that back.
Yeah. So, anyways, there are 5 ways in which the tax code favors the rich, and it really is a tax code that was written by millionaires for millionaires,
and they're always tweaking on it. I mean, over the past decade, there have been an average of more than one change per day.
Yep.
And you ask the average man on the street what has changed in the tax code over the last 10 years, most of them probably can't tell you anything.
They don't have a clue. If they even
can't begin to realize how this system is being manipulated against them. They just accept it because it's the only thing they've ever known. There is a better way, folks. It's called the fair tax. Wake up.
Yep, that's right. And as you were saying, a lot of them are oblivious to it because you might not realize this. I didn't until I heard it. But 70% of people, individuals that submit their tax returns, use the easy form. 70% use the easy form. So deductions and all that stuff never enters into their thinking.
You just take the standard deduction and go.
Yep, just go. Yeah. So that's the way it is. So it really is a tax code that's written by millionaires for millionaires because there just happen to be, well, right now, half of the people in Congress are millionaires. Unlike the rest of the country, in which a very small percentage of them are millionaires.
Yeah.
So I think that one thing said 0.3%.
Yeah.
So I don't believe in using those figures that our friends in Congress are really representative of the rest of us. And worse than that, I think they've forgotten. I think they've forgotten what it's like, to live outside the Beltway and have to put up with the tax laws that they foist upon us almost on a daily basis. Like Bob says, all these changes that come along almost on a daily basis.
That's why the flat tax won't work.
Yeah.
Even if you could have a perfectly flat tax tomorrow, I guarantee you before the ink is dry on the act, there would be lobbyists coming into the congressman wanting to buy tax favors again, and it would not take long again at all before that perfectly flat tax devolves back into something like we've seen today. We have seen that happen. They tried that in the mid-'80s, and look what we've got now.
Yeah, those 12,000 lobbyists that we talked about in the last episode, they love the idea of a flat tax. They love it. They yearn for a flat tax because they get to start all over again. They start from scratch, and they will. Yep. They absolutely will. If a Congress passes a flat tax, it will last. It'll stay flat no longer than the 2-year duration of that Congress, and after that, it'll be every man for himself.
And do not confuse the fair tax with a flat tax. A lot of people think of those two things in the same breath. The flat tax is still a tax on income. It still requires the IRS to enforce and administer, and it is not going to stay flat. We've seen it before. The fair tax totally does away with the income tax. Gone. IRS completely tossed onto the scrap heap of history. The fair tax is, for all practical purposes, a sales tax. You pay it anonymously at the cash register. No more withholding, no more tax returns, no more audits, no more any of this nasty stuff that's associated with the income tax. It is not a flat tax, not even close.
Yep, that's right. It's a very important distinction. All right. just as we mentioned on several occasions, a number of the states are kind of like a fair tax state, such as Florida, Tennessee, Texas. They have a sales tax. They don't have an income tax.
Yeah, I read that article that Brian pointed us to last time about the huge surpluses that Tennessee has.
Yeah.
Because they have a consumption tax economy, not an income tax economy.
Yeah.
And it's amazing. Everybody needs to read that.
Yeah, it's a good one. So
we need to put that link up on our Facebook page so everybody can
idea.
follow it.
I'll do that as soon as I get home.
Do it.
From the studio. All right. Send me a reminder, will you? Because, I'm old and they think I'm stupid.
They think you're stupid, right.
All right. If you want to get a hold of us, the FAIRtax Guys at gmail.com, FAIRtaxGuys@gmail.com. Just send us. If you think we're doing a really stupid job, let us know. All right.
Don't go there.
But how are we going to get this done? How are we going to get the fair tax passed? Now,
we're going to have to convince those millionaires that if they don't, that we're going to vote them out. That's the only way.
Yeah, and
that means there has to be a bunch of us, which means AFFT needs a huge membership, and we need you.
And we need you within the next few months, too, because regardless of who is elected president, in November, next year, the House is going to take up tax reform. It's going to happen. Now, Paul Ryan has come out with his better way, and as we've said before, we have the best way.
Yeah, the better way is better than we got, but it ain't the best.
No. So, uconnection.org. That is the newest website for the Americans for Fair Taxation. And you're going to see, in fact, by the time you hear this, we should have a revised, streamlined bigsolution.org. Randy has shown it at a couple of our local meetings, and it's a much nicer looking website, and it's going to operate better. But you can connect. If you're not already getting like Fair Tax Friday, you can connect with the Americans for Fair Taxation by giving them your contact information. They never share that with anybody. You will not start getting spam from all over the place. They never, ever share or sell their information database. No,
okay, so, Ron, I just noticed there's something that is not on your list there that people can use to support the fair tax. That's FAIRtaxRewards.com.
Oh yeah, you're right. I gotta include.
You gotta add that to your list there. Explain that.
Yep. FAIRtaxRewards.com. If you go shopping, a lot of people do shopping at home. Even if you're going to go downtown and pick it up at like Walmart or Target or Home Depot or whatever, you look for something online. You find what you want. You say, okay, I'm going to pay for it here. I want it. I want to pick it up at that store. If you first go through FAIRtaxRewards.com, FAIRtaxRewards.com. Go through that and set up an account with them. It's just, it's free. But if you do your shopping through that site, then when you make the purchase, you'll get a small stipend, but the Americans for Fair Taxation will get a small stipend too.
So it's like an extra 30 seconds. You go to FAIRtaxRewards.com. Then from there, you branch out to the same, Amazon or Walmart or whatever online site that you want to go to.
Not Amazon.
Not Amazon.
Amazon's too big. They're like their own universe.
I was just trying to think of online shopping sites. There are hundreds of places, online shopping sites you can get to through there.
But I've heard from people who, are working people, and they do this. They go down and pick it up on their lunch hour, and boom, it's all done, and they support the Americans for Taxation. What better way could there be?
There isn't. So I like that. So again, bigsolution.org, check that out. FAIRtaxRewards.com, check that out. Our Facebook page, check that out. The FAIRtax Guys at gmail.com. Write us if you would.
The webinar is the fourth Thursday. Go to fairtax.org/webinar to register. You'll enjoy it. It's in the comfort of your own home, and it's interactive.
Oh, you snuck that in really well, so your wife won't beat on you when you get home.
Yep.
All right, well, that's going to wrap it up, do it to it for this edition of Fair Tax Power Radio. Thank you so much for listening. We do invite you to keep listening. We're going to be producing a lot more of these FTPR episodes because there's a lot to talk about.
Yeah,
until we meet again, I'm Bob Paxton.
And I'm Ron Malero.
We are the FAIRtax Guys, reminding you that the fair tax is America's big solution, and once you understand it,
you'll demand it.
Fair tax is coming. Don't stand